What are the policy implications of fertility rates? Imagine a future where fewer babies are born each year. This is happening in the United States as fertility rates decline over the past decade. It might seem like just a number, but it has big effects on the country's economy and society. When women have fewer children, the population growth slows down. If the fertility rate drops below about 2.1 children per woman, the population will eventually shrink unless immigration increases. Currently, the United States is below this level, meaning fewer babies are being born than needed to keep the population stable. This trend impacts the workforce. Fewer children today mean fewer adults in the future. Starting around the year 2026, the smaller groups of young people will become working adults. This can slow down economic growth because there will be fewer workers to produce goods and services. It also means less tax money to fund public services like schools and roads. Governments might face challenges in balancing budgets as the number of taxpayers decreases over time. Social programs also face changes. With fewer children, schools may need to close or combine classes, and there could be less demand for early childhood services. But at the same time, the population is aging. More older adults will need support through programs like Medicare and Social Security. This shift requires policymakers to rethink how they fund and organize these services. Since increasing fertility through policies like tax credits or paid family leave has shown limited success, immigration becomes an important tool. Bringing in more working-age people from other countries can help fill the gap left by declining birth rates. This can support economic growth and keep government revenues steady. However, trying to boost fertility with incentives alone might not be enough. Social and economic changes influence family choices more than policies can. Younger adults may prioritize careers or other goals over having more children. So, policies need to consider broader social trends. Planning for a smaller population means adjusting infrastructure and housing. Fewer people mean less demand for new developments and a need to rethink urban and rural growth. Investing in technology and productivity can also help make the most of a smaller workforce. Overall, the decline in fertility rates in the United States creates complex challenges. It affects how the economy grows, how government budgets are managed, and how social services are delivered. Policymakers will need to find balanced solutions that include immigration, social program reforms, and smarter planning for the future.